Happy New Year! Welcome back to another episode of Chat with Brandy, where we talk everything business and personal finance, taxes, ways to grow your profit, and live your best life possible. I'm your host, bookkeeper, and tax preparer, Brandy Miron, and this is episode number 14. This video is part 2 of the series of starting your business. A couple of weeks ago, we started it, just taking you down a typical process of what starting a business or a side hustle looks like and the many paths that can take you down. If you haven't watched the last episode, which is episode 13 yet, go back and watch that video before you watch this one. Again, in this episode, I will be referencing the checklist on my website called Business Startup Checklist. Is it a resource for you to use? And just like the last episode, we will be using the analogy of having a new baby. So last week we were like pre-pregnancy, thinking about having a baby. This time you've made the leap. You and your partner are pregnant. This baby is coming. So let's get the nursery ready. Okay, so setting up a business. So the first kind of thing that you want to do when you're setting up your business is you need to decide on a legal structure. So there are 3 major structures here in Canada, specifically always I am talking about Alberta, that your business can take on: a sole proprietorship, a partnership, or a corporation. Okay, so let's just kind of talk about the advantages and disadvantages on both sides. Sole proprietorship, so this is our sole proprietorship side, means that there's no legal separation between you as an individual and the business. So you're both one and the same. You would file your taxes on a personal T1 tax return, just with an extra, just eating my hair, with an extra Schedule 2125. You're the sole owner of this business. I just dropped a piece of paper. I'm back. So let's go through the advantages of a sole proprietorship. So it's really easy and inexpensive to set up because you're not setting up any extra entity. There are lighter regulations on you as far as what the government requires from you. So you don't have to have a separate bank account legally. You don't have to register anything at the registry. Like I said, you get to use the same tax return that you normally do. And you don't have to have a minutes book with a sole proprietorship. If you have a loss, so let's say you have a year, a lot of times it's maybe your first year in business where you don't actually make a profit, that can actually give you a tax advantage personally, because what happens is when you're a sole proprietorship, all of your income gets pooled into a taxable income. So it would be pooled in with your employment income, any rental income that you might have, pension income, all that kind of stuff. Now, if you have a business loss, that too would go into the pool. So it would actually lower all of your taxable income, meaning that you would have less tax to pay because of that. All the profits go directly to you. So meaning that you don't have to worry about payroll. You don't have to worry about dividends. If your business makes a profit, you get it. There's no extra steps for you to get it. It's also cheaper accounting. So again, because we're not using a different tax return, because we're not having to fuss with a minute book, that kind of thing, accounting is a lot cheaper than on the corporate side, which we'll kind of talk about later. The disadvantages of having a sole proprietorship. So the biggest one is that you have unlimited liability. So because you and your business are the same entity, if your business was to get sued, they would be able to pull in all of your personal assets. So your house would not be protected, your personal vehicles, any savings, that kind of thing, would not be protected against any sort of business liability. Okay, so that's kind of an issue. You have a higher tax rate. So typically a corporation would pay a lower rate of tax than a personal person would. Your personal tax rate is whatever income bracket you fall into, whereas on the corporate side, even the lowest personal tax bracket, usually a corporation would pay a lower rate of tax than that. The ownership of a sole proprietorship is not transferable, so you can't really, you could sell the assets of the business, but you couldn't sell the business itself. So because of that, if you die, the business dies with you. You can't easily, just say, okay, you get all of my business. You'd have to be incorporated to do that. Also, if you're looking for funding or investments of any kind, a lot of places would want you to be incorporated instead of just having a sole proprietorship. Again, they want that separation of liability for you. Okay, so that's the sole proprietor side of it. On the corporate side, oh, and I should say partnerships. So a partnership is technically still a sole proprietorship, but it's where more than one person has combined their resources to create this business. Now, I can't really think of a situation where I would recommend this tax structure. If you have more than one owner in a business, I think that you should incorporate. The agreements between owners or shareholders can get very sticky very fast. And so not only would I suggest that you see a lawyer about having a shareholder agreement or an owner, like a partnership agreement, but I would also think that having a corporation is just one more layer of protection. If there's issues with, well, how much profit share do I get? Should we sell the business? Like that kind of thing. It just gets so messy. I would much rather contain that in a corporation. So that's kind of where the partnership lies in there. A corporation, so just go to my notes. So a corporation is a completely legal separate entity from yourself. So even if you're the sole owner of the corporation, it's still a separate entity from you. You can incorporate provincially or federally. I would recommend seeking legal counsel when incorporating. So technically you can go to a registry and do all the incorporation yourself, set up your own minute book and that kind of thing. I would recommend legal counsel. It's about $1,000 to set up, okay? And then about $325 a year after that to annually renew. But just having the peace of mind that your share structure has been set up properly, your minute book has been set up properly, and you have all your ducks in a row is gonna be so worth that time and effort. Setting up a corporation, I know it may not seem like that big of a deal, but it is. Like you're creating something. You should be interested in investing into it, okay? So also something that I want to note when it comes to the corporation side of things, you should be aware of something called personal services business. So Canada Revenue Agency has stated that corporations that are open for the sole use of working for one company, essentially as an employee, should not get the tax advantages that typical corporations get. So a good example of this is an oil field worker who's working for Suncor, but Suncor has said, you know what, we want to treat you as a subcontractor. You have to incorporate in order for us to do that. And then you're on your way. Okay, so what Canada Revenue Agency says about that though, is if you're only working for Suncor, either because that's the only place you want to work for or because they've made you sign a non-compete clause, and you're showing up same hours every day, you're never invoicing them, they're just paying you, you're not actually a corporation. You are an incorporated employee, and the way that they want to treat that is just like personal tax. So you have to be careful about that. If that is something that sounds like your situation, please get some one-on-one advice because, it's just a trap that I don't want to see people fall into. Okay, so back to the corporate side of things. Advantages. So, of course, there's limited liability. You are a separate entity. So if someone is suing the corporation, they will not be able to go after your personal assets. They're not going to be able to go after your home or your cars. There are, of course, exceptions to this rule. Okay, so sometimes you may have to personally guarantee a loan for the corporation. So you might have to get your house involved in that. Or if you fall behind, if the corporation, I should say, falls behind on source deductions and even sometimes GST remitting to the government, they can say the directors are personally liable for that. So there are situations, but for the most part, opening a corporation is a really good way to limit the liability to yourself and to other shareholders, okay? With a corporation, the ownership is transferable. So at any time you could say, okay, this corporation is now yours. You can't do that with a sole proprietorship, as well as if you were to die, even if you're the only shareholder, that corporation is still in existence. So your heirs or whoever you want to leave that business to would be able to still take it over, okay? Like I said before, there is a possible tax advantage. So if you leave profits in the corporation and you don't take them out for personal use, that profit would be taxed at a lower rate than it would be as a sole proprietorship, because with a sole proprietorship, all of the profit is being taxed at a personal rate, regardless of whether you're saving that money or not. With a corporation, if you leave some of that profit in the business to use, purchase assets or whatever at a later point, it is going to be taxed at a lower rate. So a lot of people like that. You can have multiple owners. So kind of like I said on the partnership side of things, if you're going with that multiple owner, if that's the structure you want to use, I would always recommend going with a corporation. This way you can also say, okay, shareholder A owns 20%, shareholder B owns 50%, and you can also say if they're a voting share or a non-voting share, so you can say if that person actually has the right to make decisions for the corporation or not. So again, this is why I would always suggest going with a corporation if there are multiple shareholders. Okay, even if it's a spouse, like even if it's husband and wife, I can't really, I'm not going to get into examples and that kind of thing, but I'm sure you can imagine when money is involved, there can be ugly things that come out of it, right? So it's a good idea to have really detailed shareholder agreements in place. And again, reviewed by a lawyer. I know a great corporate lawyer. If any of you need a recommendation, I'd be happy to give you a referral. It's just something to protect yourselves and, be able to go back to and say, we're having this disagreement. What did we say about this in the beginning, right? Okay, the disadvantages of a corporation, tighter rules. So yeah, you are required to have a separate bank account. Your accounting needs to follow generally accepted accounting principles, GAAP, and you need to have a minute book as well. Okay, so that a minute book is where it shows all your incorporation documents, any meetings that take place between the shareholders, dividend resolutions, things like that. So it's regulated quite tightly. Okay. It's more expensive to set up and maintain. So I kind of already talked about those fees of about $1,000 for the startup and then $350 per year to renew. That is because, again, it's its own legal structure. So it's something that needs to be reviewed by a lawyer. It's something that needs to make sure that all the shareholders agree and that kind of thing. So it's important to do that, and therefore it's more of an investment, right? The insurance and accounting is likely going to be more expensive. The accounting for sure, 100% is going to be more expensive to do. That T2 is just more complicated than a T1 tax return is. And again, the bookkeeping is usually more complicated. And the insurance, it may not be more expensive, but I would just say, I would probably think it would be. If you have to go from, especially like a rider on a personal policy to a full-blown commercial policy because you've incorporated, you're likely going to be seeing higher premiums, okay? The profits, so if you want to pay yourself as the owner of the company a salary or dividends or just like some profit share, that can't just automatically go to you like a sole proprietorship does. You have to do a T4, you have to do a T5, you have to do payroll, right? So it's just an extra step because, again, you're a separate entity, okay? So hopefully me going through some of that will help you decide on what you want your legal tax structure to be. And if you have, more specific questions, please feel free to reach out to me, but this is just kind of a general guideline. Okay, so the next step, we're gonna name the baby. So decide on the name. Whether you're incorporating or not, you can decide if you want a specific name, or if you just want it on the sole proprietor side, you could just leave it as your personal name. Or on the corporation side, you can leave it as a numbered company. So you've probably sometimes seen that like 1, 2, 3, 4, 5, 6, Alberta Limited. Like that's just kind of like a no name sort of corporation. But if you want a different name, you can visit a registry and do something called a nuance search. So basically they're searching to make sure that that name or something extremely similar isn't already taken. And then also they have a couple regulations around what you can name your business. So it can't be intentionally misleading. So you can't be like ABC Trucking Company when you sell telephone service, right? But yeah, so you can, then once you trademark that name, again, at the registry, so you've done the search, you go, okay, yes, this name is available, I want to take it. Once you trademark it, it's yours until you cancel it or you want to legally change it. If you have incorporated, you will need to call CRA Business Line to apply for a business number, unless your lawyer does this for you. Regardless of whether you are incorporated or not, you may also want to open a GST account or a payroll account. For GST, assuming that you're selling a product or a service that isn't an exempt product, so for example, no matter how much money you make, you don't have to charge GST on daycare services or most financial services like accounting and bookkeeping you do, but if you're a financial advisor or you're charging commissions kind of thing, you don't. But if you're not in one of those exempt, so most of you, You don't actually have to open a GST account or start charging GST until you have reached over $30,000 in gross sales. So over a rolling 4-quarter period. So most businesses aren't going to have this concern at the beginning of the business, so right at the start, but there are circumstances where you may want to open a GST account before you're legally required to. So if you have a lot of startup costs, so let's say you have to buy a bunch of equipment to get the business up and running and you're going to have to pay GST on that, you might want to open a GST account right away, because then you'll be able to use the GST that you're paying for that startup equipment and ask for a refund on it. If you can't do that unless you have a GST account open. The other reason that you may want to open a GST account right away is because a potential client is requesting it. Like sometimes they want to be able to claim the GST that they pay, so they say, well, I want you to have a GST number. It just happens, okay? So once you've decided on that, you would go to the next step, which is applying for an appropriate business license. So again, I'm talking about the City of Edmonton. I will link the City of Edmonton licensing website, but if you're not in Edmonton, just do a quick Google search like Sherwood Park business licensing. It should take you to some sort of informative page. Whether you're running your business from home or another location, you'll likely need at least one business license. You might need more if you're in a regulatory industry like day home or a bar or food service of some kind. You'll probably need more, but just make sure that you're the whole point is you should be going down this road now before you launch, right? Make sure that these things are in place now, okay? Open a business banking account. So I did say earlier that if you have a sole proprietorship that you aren't legally required to have a business banking account, but it will make your bookkeeping life so much easier if you do. So look around for a low-cost option. And you might even be able to find somebody who also offers like a payment solution. So if you want to accept debit or credit, you might be able to find a bank that is going to offer you that debit machine as well. Kind of related to this category is getting a business loan, financing, funding. We will go into that next video. So just if you're like, but I have questions on this, just be patient, we'll get there. The next one is accounting. So now is a great time to establish your company's accounting plan. So you're going to either hire an accountant or a bookkeeper. Select your accounting system, and I highly recommend QuickBooks Online, as I've talked about before. And it's super user friendly, but I also offer training on it and just full service on it as well. And this is also the time, if you've incorporated, that you're going to pick your fiscal year end. So if you're a sole proprietor, your fiscal year end is always December 31st. It just follows the calendar year. But if you're a corporation, you get to choose your year end in the first year that you incorporate. Lots of people like to keep the calendar year because it just goes with their personal taxes, it goes with the payroll calendar, that kind of thing. But if your business is very seasonal, you might consider a year end that doesn't fall into your busy season so that you have time to kind of deal with taxes, right? So I'm just going to show you some deadlines and dates to consider. Ooh, okay, just make sure you can see that. Okay, so the sole proprietor, we'll start with that. So the year end, like I say, is always December 31st. The taxes payable are due April 30th. So, and here you'll see the T1 tax return is due June 15th. So technically your tax return isn't due until June 15th, but if you have taxes payable, they're still due April 30th. Okay, so I usually strive for that deadline. The annual, if you have GST set up and you have it set up on annual, it's going to be due April 30th as well. Also, just so you know, monthly and quarterly GST are also available if you would prefer to do that. On the corporation side, the year end is your choice. Okay, then the taxes if you have taxes payable, they're going to be due 2 or 3 months after your year end. Okay, now the 2 or 3 month thing, it really depends on the amount of income your corporation makes, what type of income your corporation makes. So I can't really define that for you in a general sense, but you should know that it's either 2 or 3 months. So I would say be prepared for two months, and if it's 3 months, then great. Okay. Your actual tax return is due 6 months after your year end. So if you don't have taxes payable, you don't have to worry about it until 6 months later. Annual GST is due 3 months after year end, and again, monthly and quarterly is available if you prefer. And then payroll and this is applies to both a sole proprietorship and a corporation, is the source deductions are always due the 15th of the following month after your payroll month. So for example, if you paid your employee in December, and then the source deductions on that payroll would be due January 15th, okay? Okay. So next step, insurance needs. So you're gonna want to, and again, this is pre-launch. This is while you're still pregnant. The baby hasn't come yet. You're thinking about this stuff. You're ahead of the curve, right? So you're gonna evaluate and select your needed insurance policies for your business. So I want you to think about liability. So, and this again, sole proprietorship or corporation, you need insurance. Liability, contents, buildings, vehicles, WCB if you have employees, health insurance, disability, life. Again, I have a handful of super smart, amazing people that can help you with basically like any insurance need that you may have. So if you would like a referral, please let me know and I can help you make a connection there. And then number 8 is announce your pregnancy. So this one is you're kind of setting up for launch. So get your internet presence going. So because now that you know your name, you'll want to secure the domain name, secure your social media accounts for the business, and get people excited. Like, you know, create that runway for your launch so that when you're kaboom, you're open and you're ready, you've already gotten people kind of hyped about it. If you're internet savvy, you may be able to do this yourself, or you could hire somebody else to do it, of course. If you do that, keep receipts. Okay, next week, we are going to talk about actually having the baby. So launching the business, like I said, getting the financing for it if you need that, your marketing plan and all that kind of stuff. So I'm excited for that, and I hope you guys all are having a wonderful holiday and have a wonderful beginning of your 2019. See you next time.